Welcome to Vinmak Farms, where we grow ideas that feed nations and build wealth sustainably. Today, we're exploring farmland investment strategies, how you can profit from agriculture and contribute to a greener, food-secure future. Farmland is no longer just for farmers. Around the world, investors, entrepreneurs, and even tech innovators are buying into agriculture because it's real, resilient, and regenerative. In this episode, we'll unpack how to invest wisely in farmland, the best strategies for 2025, and how you can build a sustainable portfolio with real impact. Let's start with why farmland. Farmland is one of the oldest and most stable forms of wealth, and one of the most relevant for the future. Unlike crypto or stocks, land is tangible and productive. Here's why investors are turning to farmland. Income and growth. You can earn yearly returns from leasing or production while your land appreciates. Inflation protection. When prices rise, food prices rise, and so does the value of farmland. Sustainability. Farmland investment aligns with global demand for green and ethical production. Food demand. Africa's population will double by 2050. More mouths mean more farms. At Vinmak Farms, we call it the green gold. It's not just land, it's living wealth that multiplies through time, people, and purpose. There isn't just one way to invest in farmland. Let's explore the most practical models for 2025. Direct ownership. Buy farmland and manage it yourself, or through a professional operator. You earn from harvests or leases. In Ghana and across Africa, many investors now buy land and partner with farm managers like Vinmak Farms to handle production. Checkmark pros: full control, higher returns. Warning cons: requires capital and time. Lease or joint venture. Instead of buying, you can lease land for 10 to 20 years and run an agribusiness. This model reduces initial costs. Farmland cooperatives or investment clubs. Join with others to pool resources and invest collectively. Cooperatives can manage larger farms and share profits fairly. Agribusiness funds, or REITs. Some investors prefer indirect exposure through agricultural real estate funds or green investment vehicles. Outgrower or partnership models. Partner with established farms, like Vinmak Farms, to finance a section of production and share returns. Each strategy has its place. What matters most is clarity of purpose. Are you investing for income, long-term appreciation, or impact? So how do you know which farmland is worth investing in? Here's our checklist at Vinmak Farms. Soil quality. The foundation of profitability. We test soil fertility, texture, and nutrients before any investment. Water access. Land without reliable water is risky. Always check for boreholes, rivers, or irrigation potential. Climate suitability. Select crops that thrive in the region's temperature and rainfall patterns. Proximity to markets. Land closer to roads, storage, and buyers cuts logistics costs. Legal and ownership clarity. Always verify title deeds and community ownership rights before purchase. Sustainability potential. Invest in land that can host renewable practices, composting, waste recycling, and biofertilizer use. At Vinmak Farms, we call this smart land due diligence. It's how we ensure every acre invested becomes an asset, not a liability. Sustainable and AMP. Regenerative strategies. The future of farmland investment is regenerative. Regenerative agriculture goes beyond sustainability. It rebuilds ecosystems, restores soil health, and makes farming more profitable. For example, at Vinmak Farms, we're developing black soldier fly, BSF, protein systems and organic fertilizer projects that turn waste into wealth-improving yields while protecting the planet. Here's how regenerative investment strategies create value. Improved productivity. Healthy soil means consistent yields. New revenue streams. Carbon credits and organic certifications boost returns. Resilience. Regenerative systems survive droughts better than chemical-heavy models. Investor appeal. ESG-focused investors love sustainable farmland. Whether you invest in Ghana, Nigeria, or Kenya, the principle is the same. Seedling. The land that gives back will always grow in value. Investors who combine profit with purpose, as Vinmak Farms does, are building the farms of the future. Risk factors and AMP, how to manage them. Every investment has risks, farmland too. But the key is knowing them early. Market fluctuations. Crop prices change. Manage this with contract farming and crop diversification. Climate risk. Floods or droughts can reduce yields. Invest in irrigation, soil conservation, and crop insurance. Legal or land disputes. Always verify documentation and involve community leaders. Operational risks. Poor management can turn fertile land into debt. Partner with experienced farm operators. Long-term horizon. Farmland isn't a quick win. It rewards patience and consistent care. At Vinmak Farms, we use climate-smart technology, financial modeling, and partnerships with agricultural institutions to reduce these risks. How to start and AMP. Final thoughts. Here's how you can start your farmland investment journey, step by step. Define your goal. Are you investing for profit, legacy, or sustainability? Choose your model. Direct ownership, lease, or partnership with Vinmak Farms. Do your research. Soil, climate, and market analysis are essential. Start small. Even a few acres can grow into a multi-farm enterprise. Think long-term. Farmland wealth grows with time, care, and innovation. At Vinmak Farms, our mission is simple: turning farmland into financial freedom while protecting nature. If you're ready to grow with purpose, join our journey. Lightbulb, subscribe, like, and share this video to inspire others to invest in the land that feeds us all. Together, let's make agriculture profitable, sustainable, and transformative.